All right, today we are digging into a monster quarter from Similarweb. And it's a story that really shows what happens when a data company lands smack dab in the middle of an AI gold rush. So what does happen when a data company perfectly times the AI boom? Well, it's a question everyone's asking, but Similarweb just gave us a masterclass, and we're going to break down exactly how they pulled it off.
The whole story really kicks off right here. This was the pop in Similarweb's stock, literally, in the first 30 minutes of pre-market trading, right when their earnings call started on August 13th. You could just feel the market listening in and going, yep, we like this. The reaction was immediate.
And you know what? That little jump was just the appetizer. The real story, the main course, is in the blockbuster numbers and the killer strategy that made Wall Street drop everything and pay attention.
Okay, so first, let's talk about that market reaction. I mean, it was a shockwave, right? Investors just rushed in, and it caught a lot of people off guard.
Here's how it went down, minute by minute. The call kicks off at 8:30, the stock's at 8:21. By 9 a.m., boom, it hits 8:52. It settled a little by the end of the day, but look, this wasn't just some flash in the pan. This was Wall Street saying, okay, we see this company differently now.
And it wasn't just a few big players either. The floodgates opened. Trading volume went through the roof, almost 7 times the normal amount. That tells you that everybody, they weren't just watching, they were jumping in with both feet, wanting a piece of this action.
So, what was in that earnings report that got everybody so fired up? All right, let's look at the numbers that lit the match.
First off, revenue, $71 million for the quarter. Now that's a nice 17% jump from last year, sure, but here's the kicker. It absolutely blew past what analysts were expecting by over $2 million. That's not just a beat, that's a statement.
Then you've got profit. They posted a non-GAAP earnings per share of 1 penny. Now I know, 1 cent doesn't sound like a lot, right? But Wall Street was betting on 0. So this tiny little number is actually huge. It means they're officially back in the black, making money. And check this out, 7. This is their 7th quarter in a row with positive free cash flow. This shows some serious discipline. It means they're not just growing on paper, they are stacking actual cash. And that's maybe the healthiest sign a business can have. And the growth is happening everywhere you look. They grew their total number of customers by 18%, and, really importantly, they got 13% more of those big fish, the client spending over $100,000. So they're not just getting more customers, they're getting bigger, better customers. Okay, so the numbers are great, no doubt about it. But what's the secret sauce here? What's really driving all this? Well, it all boils down to one thing, a massive, and I mean massive, bet on AI. And get this. It's already paying off. 8% of their revenue in Q2 came directly from selling data to companies building generative AI models. We're not talking about a future plan here. This is a real, significant business for them today. And you don't have to take my word for it. Just listen to the CEO or offer on the earnings call. He was practically buzzing with excitement when he said this.
So you might be asking, how does this AI revenue actually work? Well, let's just look at the journey of one of their big tech customers, because it tells you everything you need to know. First, they sign a 7-figure deal for AI training data. Then, that deal gets so big it becomes their first 8-figure customer. And then, and this is the best part, they renew and expand again with a multi-million-dollar multi-year deal. That's not just a sale, that's a partnership. It proves this AI business is sticky as L.
And that idea of stickiness, of durability, is just so important. This isn't about one great quarter for Similarweb. They're building a foundation to make sure this growth is here to stay. I mean, just look at this. A year ago, less than half of their recurring revenue was locked into multi-year deals. Now, it's 57%. That's a huge jump. It tells you their customers are all in. And it gives Similarweb a crystal clear picture of what their revenue will look like way down the road.
Okay, to really get that, we have to talk about a piece of Wall Street jargon called RPO. Don't worry, it's simple. Just think of it as the company's backlog of business. It's all the money they're owed from contracts they've already signed. Basically, it's a sneak peek at future sales, and it's a super strong signal of a company's health.
And Similarweb's RPO? Wow, it's just on a tear. It's up 26% from last year, clocking in at almost $274 million. That is a massive amount of future business that's already in the bag. It just adds so much credibility to their whole growth story.
So you take the strong quarter, you add the AI engine, you throw in that massive backlog, and what do you get? You get a company that is looking ahead with a ton of confidence.
And they showed that confidence with a classic power move in their guidance. Look at this. They kept their revenue forecast for the year exactly the same, but they've raised their profit forecast. That is a huge flex. It's them saying, not only are we going to hit our sales goals, but we're going to do it way more profitably than you thought.
So when you boil it all down, the takeaway is crystal clear. Similarweb took its giant mountain of digital data and figured out how to turn it into pure gold for the AI era. They're selling the shovels in a gold rush.
And that really leaves us with one big question, right? Is this just Similarweb's amazing story? Or have we just seen the new playbook for how every data company is going to win in the age of AI? Something to chew on. Thanks for joining me for this explainer.